Hello, hello. I'm Dr. Maria Sampoulos. Our guest today is Dr. Richard Edlow. Richard is recently a senior was recently a senior advisor for eye care services partners and consolidator for vertical integration eye care platforms for Katzen Eye Group, which was 150 providers in 50 locations throughout the Midwest region, California, Illinois, and Colorado. He is currently retired. Today's topic, we're going to talk about private equity. And I thought he'd be a great guest to have on here today because he has a lot of experience on this topic and a lot of experience on economics and things like that. He has frequently lectured in the past and currently on economics, business, and marketing issues surrounding the eye care profession, marketing trends, and workforce issues. He previously served as chair of AOA Information and Data Committee for over 15 years and helped compile the American Optometric Association state and professional reports. Serves on various boards and committees, including the American Society of Cataract and Refractive Surgery, Integrated Ophthalmic Managed Care Eye Care Delivery Committee, and was one of the early developers of managed care programs in the United States. He received his degree of economics in University of Maryland, an optometry degree in Pennsylvania College of Optometry, and was the past president of the Maryland Optometric Association and Association's Optometrists of the Year in 1992. So welcome. Thank you so much for coming.
My pleasure. Looking forward to this.
Yeah. So there's a lot of buzz in the industry about private equity. So I wanted to have you on and get a non-biased view of it and a candid view. So just for our listeners that don't know, what is private equity?
Sure. So it's pretty interesting the way the economics are of all this. But private equity is essentially funds that are being invested in companies that are not publicly traded. So it's not, you can't go look in the Wall Street Journal at the quote of a publicly traded company on any given day. It's money being invested typically by pension funds, very wealthy investors, sovereign wealth funds, countries that have billions and billions of dollars to invest, sometimes trillions of dollars to invest. And they're looking, the investors are looking for a return greater than what you would get in the public market or greater than you would get from bonds. And typically, these private equity investments are able to accomplish those goals. So a private equity investor with dollars invested from all of these pension funds and wealthy investors will take those dollars and look at companies or industries to invest in with the hope that in 3 to 5 years down the road, they can sell it at a significant profit. The goal in that 3 to 5 years is to consolidate the investments, perhaps with mergers and acquisitions, consolidation. And to date, it's the industry in general, regardless of what industry you're looking at, whether it's healthcare or automotive or real estate or whatever it may be, private equity investments typically have outperformed other investment options. So it's been very attractive.
Where does all this money, come from the investors and things like that?
First of all, excuse the coughing. I'm getting over bronchitis. Actually, still in the midst of it. But anyway, the money is coming from pension funds. So it could be, state of New York pension fund is looking to get better returns on their investments than they could in other investments. So they allocate a certain amount of their money to investing in private equity. It's from some sovereign wealth funds. For example, Norway is a great example. Norway has made all of its money from oil in the North Seas, and they've literally trillions of dollars. Several years ago, Norway, who has made all of its money from oil and gas reserves, has said, we will no longer invest in oil and gas research. So they're redirecting, they have about $2 trillion to invest. They're redirecting their investments a lot of it into private equity. And when you think about it, as we think about things globally, what country has probably the strongest economy out there. If you're going to make an investment, what economy is the strongest? Well, it's the United States economy. With all the craziness that goes on in the US, and we talk about inflation and climate issues and things like that, the US economy is still the strongest globally. And then if we think about the US economy, what component of the US economy has the greatest future and has the greatest strength? It's healthcare. Healthcare represents 20% of the gross domestic product in the US. 20%. That's huge. One out of every $5 is spent on healthcare in the US. So if I'm Norway, or if I'm a pension fund from New York or California looking to invest for a greater return, I'm going to put it into private equity in the US markets in healthcare. And then drilling down a little further, we say, okay, well, in healthcare, well, what do we want to do in healthcare? Well, think about the demographics of the US population. We want to invest in age-related healthcare. So it might be cardiology, it might be dermatology. It's very much eye care, ophthalmology and optometry. So there's huge interest in from private equity in looking at the U.S. eye care industry, and especially another concept. As we all know, it's a pretty highly fragmented industry, eye care. Sure, we see some consolidation and there are acquisitions that are going around, but regardless, amongst the 47,000 plus or minus optometrists in the US and the 17,000 plus or minus ophthalmologists in the US, it's still highly fragmented. And that's a great opportunity to invest in the industry, consolidate, and create the synergies that go along with consolidation.
I heard that eye care has been the rise in private equity over the last couple of years. Like they really wanted to invest besides other medical professions. Is that because of what you said, or is it also glasses, materials sold, and things like that?
It's for a variety of reasons. One is the excuse me, the demand for age-related eye care, whether it's cataract, glaucoma, macular degeneration, diabetic retinopathy. There's the growth there is going to be much greater than the growth in the general population. So there are opportunities there. And then, as you mentioned, optical, the two of the real cash cows in the eye care business are the optical side of the business and the ambulatory surgical centers that are single specialty eye care surgical centers. And so if I'm a private equity investor, I'm looking for a vertically integrated entity that has optical, optometry for comprehensive eye care, ophthalmology for surgery, and ambulatory surgery centers go along with it. And if I can find something vertically integrated like that, put it together, create economies of scale, to me, that's a great investment with great growth potential. One of the things that one will see over and over again in researching things in healthcare and private equity is that nothing's recession proof, but when you think about it, eye care is very much recession resistant, or COVID resistant for that matter. You think about, all the crap that can happen in an industry and slowdowns and things like that. Regardless, the need for the services in eye care, whether it's eyeglasses or surgery, is growing no matter how you slice it or dice it. And so it's a great opportunity and a great investment area for the private equity guys.
What about the other side where the doctor wants to sell to private equity? What does that deal look like? Because there's a lot of non-disclosures out in the industry and doctors don't know. How do they know they're getting the right deal and when to walk away?
Yeah, good question. First of all, selling private equity is not for everyone. There are certain times in one's professional career that it makes sense. Certain markets, boots on the ground kind of reality of where your practice is. So a typical deal might be a 60-year-old optometrist who maybe has one or two associates, practice is doing well, has built this practice over 30, 40 years, and is trying to figure out, okay, what the hell do I do with the rest of my life and professional career? And at the age of 60, typically looking for, maybe I'm going to work 5 more years. I'm going to start slowing down, whatever it may be. Am I going to sell to my associates, or am I going to look for another buyer for my practice? And unfortunately, for the young associates, the private equity investors are willing to pay a lot more for the practice than what one could get from the associates. So depending on this 60-year-old optometrist trying to figure out where to go in life, if, for example, the 60-year-old optometrist has done extremely well, saved well, invested well, and really has everything they need financially, they may look at their practice, their baby, for 30 years and say, I want to keep this thing going with the corporate culture that it has now, and therefore I'm going to sell to my associates and let them buy it out over time. On the other hand, that 60-year-old doc who maybe didn't save the way the doc should have says, okay, well, I can sell to private equity and I can get 5-6 times my earnings each year, and I only want to practice 5 more years. I'm going to sell to private equity. And in selling to private equity, that 5 times earnings is taxed at long-term capital gains versus ordinary income. So it starts to make a lot of sense for the seller. Now, what that's going to typically look like, which is your question, so I'll get to answering your question actually, is that this 60-year-old doc is going to go into a contractual transaction with the private equity buyer. The private equity buyer is going to buy the assets of the practice name, everything that goes along with it. And the doc is going to typically either get, excuse me, a one-time cash payout, again, a long-term capital gains, or very frequently maybe 80% in cash, and 20% will go into staying involved and invested in the new company, the private equity firm that has invested here. And that typically works out real well for the seller economically. The reality is, after the sale, the selling doc needs to be very comfortable with the fact that you're no longer the boss. Needs to be very comfortable with the fact that the corporate culture may change. Back when I was running a large eye care practice, we had 26 docs, number of locations. I would do an orientation for new employees. And I would always say there are 2 ways to run a practice. Here you are, welcome to this great eye care, healthcare entity. There's a great future here. But you can either do, every day you wake up, you come into the office and do what's the very best thing for the patient. And in doing so, we're going to make money. We're going to be profitable. Or you can come in each day and say, how can I make a bunch of money? Both will accomplish comparable goals, but the one of looking out for the patient first that then derives profit is the way to go. That culture sometimes can change. It changes the corporate culture of the practice somewhat. It's not good or bad, or it's not for me to judge that or for anyone to judge that, but we see that happening. But regardless, for docs looking to maximize the value of what they've built up over the years, private equity is a good way to go.
What is the, like, after they sell, what's the process should the selling doctor follow?
So that actually brings up a point from your previous question. How do you figure out what the deals are like? So over a professional career, we do tens of thousands of refractions. We're pretty good at it. But over a professional career, we sell a practice maybe once. We're not real good at it. So how do we get real good at it real quick? Well, typically my advice, and I get a lot of calls and emails from docs, my advice is find a practice broker to help you through the process. And there are a number that specialize just in eye care. And they know what the deals are like. They know every deal. They know what the multiple being paid on your profit is. They know what your employment contract ought to look like afterwards. They know whether you should get paid everything up front or 80-20, whatever it may be. A practice broker is going to give you the advice knowing what's going on in the marketplace. In addition to that, part of the process, to your recent question, the process is you need to go through a due diligence process where the buyer is making sure that everything is kosher. Everything, you're looking at bank statements, looking at revenue, looking at tax returns, looking at your appointment schedule, your software that you're using. And that whole process of due diligence allows the buyer to know that, okay, we've got a great practice. It's solid, it's financially firm, it's doing well. Let's go forward with the transaction. Well, going through the due diligence process, I always kind of compare it to a prostate exam for men. It's not easy. It's a lot of work, and the broker can really help you through that quite a bit. So that is certainly my advice. And along those same lines, one needs to be somewhat cautious about who your advisors are through all this, your accountant, your attorney, and the practice broker. When the practice brokers speak to other docs that have sold and what their experience has been, keep in mind with the attorney that you've been playing golf with for 20 years, the accountant who you see regularly out socially, all of a sudden they're realizing I'm about to lose a client. So what is my advice going to be for this guy? Well, they're going to be professionals and they're going to give the right advice, but all things being equal, just keep in mind that if you're interested in selling, your accountant and attorney may not be as interested in that occurring. So keep that in mind. Then the process, once you go through all the due diligence, come up with a final agreement, it needs to include what are they buying? What is your employment going to look like moving forward? Do you want to work 5 days a week for 5 years, or 2 days a week, or scale down over the next 3 years? You want to be very, very clear about that. Very, very clear about vacations, continuing education. Spell out that contract very clearly in advance. And then also things to consider are, well, what about my employees? What about the staff that I've worked with for so many years? There may be certain protections you want in place for them. Certain employment agreements for some of your key people. That may be important. One other thing to keep in mind always is, if I'm a private equity buyer, I'm looking to buy your practice. I'm buying it because it's financially sound, but I'm buying it because of the reputation of the practice. I'm buying it because of your patients that you've developed a relationship with over years. I don't want to screw that up. I want to build on that. So don't be so concerned about, if you're the selling doc, oh, the PE guys are going to come in and they're going to just screw it all up. No, they want to keep the momentum going and build on it. The private equity firm, at the same time, will look for synergies. Okay, do I have better economies of scale in buying my cost of goods percentages, frames, lenses, equipment, so on and so forth. So those are things that will be important. And then as part of that transaction process, it's important, I believe, to once you've agreed to things with the buyer, is to then bring your staff up to speed on what's going on, to allay their concerns that, oh my God, I'm now working for somebody else. Hopefully you wake up the next morning and things really aren't much different. So that's kind of the approach, I believe.
Yeah. So, I've talked to a lot of doctors that sold to private equity, and, some are very happy. They're just like, hey, I just come see my patients. I do what I want. We have new equipment. We have better equipment in our office now. And we just serve out. My job is just to see patients. I don't have to worry about the office front desk. If there's an issue, hey, I can't help you. Call, the headquarters to do that. And then on the other side, doctors that have been employed have seen better benefits, better salaries to help, and production bonuses and things like that. So for some people, it's been very good. On the other flip side, there's doctors that have had some bad experience, unfortunately, and some have said that private equity kind of brings down optometry and maybe bring it towards more of employed models. What is your view on that? And do you still think independent optometry is still strong for the future?
So, yeah, really good question. First of all, my initial answer is independent optometry has a very bright future. Here's a way to look at it. And I track all this. I track all the macroeconomic data. I track the demand for eye care. I track the supply of optometrists and ophthalmologists. I match up supply and demand. I track, I go through all the Medicare utilization payment data every year. I track the consumer price index in the eye care arena regularly. I take a look at market size and where it's all headed. Just as private equity is interested in buying eye care, is the very same reason independent optometry has a bright future. Both are looking at, we're in a great position. There's a limited supply. If we're looking at just optometry in particular, not the whole eye care industry, there's a very flat labor supply of ophthalmology in the US over the next 10 years. I track it every year. How many new docs, how many exit. I do the same for optometry. I look at census data and I extrapolate out what the future demand is going to be for specific eye care cases and who's going to handle them. Medical eye care for optometry has the greatest future ever. So if I'm a private equity investor, I want to buy into that. At the same time, if I'm an independent optometrist, I want to build my practice because I've got this great future. You may be hearing a dog bark in the background. I have my office door closed and I hear my dog scratching on the other side. But anyway,
That's okay.
She's really cute. The demand for eye care is growing faster than any of us can deliver, both in optometry and ophthalmology. So the future is very bright. The question for each doc is, do I want to be in an independent practice, independent group practice, or do I want to just be an employee and not worry about all the hassles of running a business? Where am I in my professional career? Am I 40 years old or 60 years old? That will be a very big part of the discussion. I see a lot of docs who maybe are in their 40s looking at, okay, well, let me build my practice now with the anticipation that somewhere down the road, maybe 10 years from now, I may sell, and structure the practice in such a way to maximize its value. If I'm the 60-year-old doc, I'm looking at it completely differently. But regardless, I feel very strongly about the future of eye care. I often open a lot of my presentations. I had this whole presentation on the economic overview of the eye care industry. And when I do it for a lot of the third and fourth year optometric programs. And I relay to them the story back in 1976, which shows you how old I am. In 76, I was sitting in the auditorium at Pennsylvania College of Optometry in Philadelphia, and our dean, Tom Lewis, got up and said, "You're about to enter the greatest profession ever." And I'm thinking to myself, give me a break. Yeah, I know I just enrolled here and I'm looking forward to it and all that, but come on, give me a break. And now fast forward 50 years later, and very much true. We are in a great profession.
We are.
Sure, student debt takes its toll. There are a lot of issues out there, but one could not be entering a greater. If I'm a new OD today, I've never had such a bright future with comprehensive.
It's great to have that perspective and to hear it from you, because within my group and network, I mean, you hear some naysayers on the profession with debt, managed care, private equity, corporate optometry, expand online refractions online. But I mean, it's just different. It's different. So I've had to do it differently in my practice, and I've been successful. It's just a little different than what it used to be. And you have to have that passion to do that. But you're right. Medical eye care is the future. We are trained. The AOA is helping, change scope. There is, and a lot of private equity is going that medical model because they know it's profitable. I know Walmart's doing healthcare centers and things like that. I mean, it's there. I mean, and we have the ability to do so. So just that mindset, if you have that negative mindset, you're never going to get ahead.
I'll give you a real quick data point. From 2020 to 2030, the demand for cataract surgery is going to increase by 4.2 million cases per year.
Wow.
Go up to 4.2 million cases. for ophthalmology to be able to handle just the increase in cataract, forget everything else, forget macular degeneration, diabetic retinopathy, glaucoma, and everything else goes along with it, to just manage that amount of cataract surgery at the average number of cases a surgeon does will require the supply of ophthalmologists to grow by 3,500 docs over this time period. What's it going to increase by? Not 3,500, 500 over that 10-year period. So what's going to happen? Well, more and more ophthalmologists are going to spend more and more time in the operating room, out of the office-based care. Well, how are you going to fill that vacuum? Who's going to take care of that? Optometry. So, and that's just one data point. I've got dozens of others that really sell the point that one could not be in a better profession right now with a greater future, with guaranteed increased demand for the next 10, 20 years than optometry.
Yeah. Well, so where do you think this is all headed? Give us like your prediction. You have the data, you have the experience over the years. Give us your viewpoint.
So currently, here we are kind of in the middle of 2022, and a little over 16% of all optometrists and 12% of all ophthalmologists are in some type of consolidated private equity employment. And that's grown over since I've been tracking it for 6-7 years now. It's gradually grown pretty much at the same pace for both optometry and ophthalmology. I tend to think, because as we look at pendulum swinging and look at where opportunities are, and the discussion you and I just had about how strong independent optometry is or independent eye care, I tend to think that 16% of optometrists in private equity will probably grow to about 20-25%, kind of max out there. Ophthalmology may get to 20% and max out there. I really don't see it getting beyond there. And so there's still always going to be the lion's share of the care being delivered in some type of independently owned eye care practice, optometry or ophthalmology. I certainly see more and more optometrists and ophthalmologists practicing together. Just makes sense. But private equity is going to do very, very well. The investors are going to get great returns. There'll be more consolidations. I see there are over 50 private equity groups right now just in eye care.
Wow.
There are over 1,500 private equity firms just in healthcare. But in any case, let's say there are 51 eye care private equity deals. I see some mergers of those. There have already been a couple. So those are going to consolidate. And at some point, usually what typically happens is a larger private equity firm will buy out the investment from a smaller private equity firm. At some point, there are no more larger private equity firms, and you either keep running it as a profitable business, or one takes it to the public markets and there's an IPO and you go public. But again, I don't see that being all of I don't see it being even close to a majority of eye care, optometry or ophthalmology down the road. So it always gets back to back when I was doing lectures in the 1980s on managed eye care. It always gets back to just treat your patients right. Just be nice to your patients, whether in private equity or independently owned. Treat people well, treat them right, provide great care, and we're all going to live happily ever after.
All right. Well, thank you so much for giving us your insights on private equity. I hope this is informational for everyone. Richard, if someone wants to email you about this, they're looking to sell, you're the guy I think people should reach out to. What is your email?
So my email will also date me and tell you how old I am. It's Redlow, so it's REDLOW, Redlow, at AOL.com. So for some of you younger docs, AOL was a company that used to do a lot. Anyway, Redlow at AOL.com. And put something in the subject line that'll get my attention. So if it goes into my spam filter, I'll find it.
All right.
Anyway, I wish everybody the best. We are in a great profession. There are great opportunities out there. And here I am at the end of my professional career clinically, and couldn't be more excited for the future.
Yeah, I'm going to have you on again on different other topics because it's a lot of different information that you provide compared to the other guests. So
Cool.
again, thank you so much for volunteering your time and coming
Very
on
good
today.
discussion. All right, take care now.